welcome back to Coffee Cafe. So, this is where we last left off. We finished the last transaction of the day by acquiring the coffee brewer coffee grinder. And what we did was we moved the coffee brewer out from the miscellaneous suspense account. And what we did was we hired LV Remodeling to do the foundation for the coffee grinder. Okay, so now it's a new day. All right, we're at the bottom of page 3 here. So this is what happened here. We end up receiving another bill from LV Remodeling Company, but this time this isn't for the reinforcement because we just hired them. This one is for the remodeling interior for the store. So this is the first job that LV Remodeling has done for us. Remember, we hired them after Kim Robinson gave us a recommendation. We hired them so we can have them design the inside of the store. So in this case, here's the bill, right? LV Remodeling, they billed us on the 11th of June. It's due on the 15th of June. Invoice is $17.54 for the remodeling interiors for the store. Grand total is $18.90. Okay, so what should I do with this bill? Now let's keep in mind, I do not have that much money left in my bank account, so we should take advantage of the time that they give us to pay our bills. So in this case, how should I record this if I just received a bill and I'm not going to pay it today? Accounts payable, excellent. Okay. Now, that will be this one will be okay. So accounts payable for $18.90. So then, what is going to be the correlated debit account? Now, in this case, what did we do? We good, right? What is that, an expense to the company or is that an asset to the company? Or is it an asset? How do we own the interior design work? No, it's going to be an expense, right? It's definitely not a revenue, right? We're not generating any money because we remodel the store. Okay, so in this case, out of all the categories of this is going to be an expense. Now let's actually take a look. What kind of expense would this be? Right? Let's see. Obviously, it's not advertising. It's not a bank fee. It could be a business expense because once again, right? We remodeled the business for the business. Let's see. Freight expense, no, it's not inventory. It's not insurance, it's not interest. Labor expense. Could this be a subcontractor expense? You did hire them. And they did a job for you, for the company. Yes. In this case, yes. This would probably be more categorized, right? In this case, if we didn't have subcontractor expense, then a business expense would probably be number 2. But at this point, yes, we hired them to do a job for us. So this is a subcontractor expense. Okay, subcontractor expense. So this is, let's see, 6510. for $18.90. Okay. We have all the information that we need, right? Who did we receive this bill from? LV Remodeling. Okay. We received an invoice number 1754. Okay. We have the due date. So in this case, we have net how many days? If I received it on the 11th and it's due on the 15th, how many days is this bill due? If I received this bill on the 11th and it's telling me that it's going to be due on the 15th, how many days do I have to pay this bill?
Like 5 days or 4 days.
4 days, right? 11, right, is already, you just received it that day. So that means 12, 13, 14, 15. 4 days. You never count the day that you receive it. Okay, so there you go. You have 4 days to make a payment. Okay. So now that I have everything here, right now, I need to transfer this amount into my ledger. Okay, because now I owe more money. So go to expenses. Right here, subcontractor expense. Right, and you could say in interior design. We're on the last end of the third page for $18.90. So we just increased our expenses. Okay. And since we received a bill and chose to pay later, we're going to also increase our liabilities. So we received an invoice 1754. We increased our liabilities by $18.90. Okay. So therefore, we should have a grand total of accounts payable to be $13,173. So definitely not a very good sign because we only had $5,000 in the bank and you owe $13,000. Okay? But again, this is a part of what happens when you need to you need to make these expenses to set your store up. You need to prepare everything before you can start generating your income. You can't open up your store and have nothing there, right? All right, so then there you go. Now that I got my journal, I plug it to my ledger. So because I dealt with somebody and I owe them money, I need to also put this in my subsidiary ledger. Okay, so this is LV Remodeling. Here you go, LV Remodeling. For interior design. Invoice 1754. Reference General Journal 3. Did they give me terms? Yes. Net 4. Okay. No discount because they just gave me only 4 days to pay this. So in this case, We already know the date. It's the 15th. Okay. For how much? $18.90. And I still have to pay it. So plug in your formula. Should show you that you owe $18.90 to LV Remodeling. Okay. So then let's see here. Okay. We decided to hire Irene Jameson, okay, for in-store help. Okay, so we're hiring an employee. We are set to pay her $12.50 per hour with no extra benefits, meaning she's just only, there's no Social Security, no Medicare. Actually, yes, because that's federal, but there's no extra benefits such as retirement plans, 401k, or vision, dental, or any of those. Those are extra benefits. Okay. She's set to schedule for 40 hours per week. Okay. And Friday, she works Fridays through Tuesday. So that means her work period is Friday, Saturday, Sunday, Monday, Tuesday. She takes off Wednesday and Thursday off for her days, because we would need her for the weekend, because usually coffee shops are more busier during the weekend, right? And sometimes on the weekday, but mostly for the weekend. Okay. And let's see, she's gonna work 40 hours per week. Okay. And she's set to start her work on Friday the 14th of June. Her pay period is bi-weekly, and it starts on June 10th and ends on June 23rd. So in this case, she joins in right in the middle of a payroll period, okay? Which is fine. It's normal, right? Because in this case, you don't start payroll whenever you feel like it. You usually start payroll usually on usually on the middle of the week, or usually it's in the beginning of the month. But in this case, right, we just barely started the company as of June 1st. So in this case, we're going to set the payroll period to be from June 10 to June 23rd. Now, if you take a look at the calendar that's on here, right? How does a payroll period work? Well, in this case, so we usually, it just keeps track of how many hours a person works in a span of 2 weeks. So, for instance, right, we're saying that we're going to calculate, we're going to start counting her hours starting June 10, right? And it's going to be for 2 whole weeks until June 23rd. Okay, that's a whole 10 days. I'm sorry, that's a whole 14 days, right? And then from there, we're going to calculate how many hours she's worked between those 2 weeks. Usually, once the payroll period ends on the 23rd, you can have the choice to either pay Wednesday, Thursday, or Friday. Now, most cases on a bi weekly payroll period, we like to pay on Friday. Okay? So, here, where that means if her payroll period is going to start on June 10 all the way to the 23rd, she's going to be expected to be paid on the 28th Friday of June. Okay? Now, keep in mind, she doesn't start to work on the 10th. We scheduled for her to start working on the 14th. Okay? 14 of June. That means she's going to be missing just 2 days of work, which is fine because we didn't hire her until today, which is the 11th. Okay, and then because we hired her on the 11th, we're gonna schedule her to start working on the 14th, because we have to train our employees before we actually have our grand opening, which is the 17th. Okay, so we're gonna have her come in for a couple days. We're gonna train her to do what she needs to do. So whether it's making the coffee or standing in front and handling the cash register, we're gonna have to train her, right? So that means we're gonna train her on Friday, Saturday, and Sunday. So then Monday we can prepare her for the first grand opening. Okay, so that's exactly what we're doing here. We hired her for $12.50 per hour. Okay, so what do I do with this right here? How do I record this transaction? How do I record that I hired Irene? Anybody? How do I record that I hired Irene to help me out at the store?
Hire new people,
Is there an account called hiring people?
account payable.
Why? I don't owe her.
So how do we pay her?
We have an expense account for that.
Okay. Subcontract expenses,
She's not a subcontractor, she's an employee.
employee.
Let me ask you this. When did she start to work?
When she start to work?
When?
14.
What's today?
Today it's 12.
Today's the 11th.
Huh?
Today is the 11th of June. See, 11 June.
Mm-hmm.
So that means she hasn't even started working yet.
Oh, okay.
So how do you pay somebody that hasn't started working?
We don't pay.
Exactly.
Mm-hmm.
All we did was just hire her. Right? So
Yes.
since we just hired her, shouldn't we record this information somewhere? How do I know I have an employee and I have to pay her?
We put like a case note.
We need to put a note, yes. So in this case, if we go to the subsidiary ledger, you have a tab for employees. Okay? So in this case, who did we hire?
Irene.
Okay, so we hired Irene Jameson. Pay date, we already know it's going to be on the 28th. We just talked about that. Okay? First name, Irene. Last name, Jameson. Okay? Pay rate, $12.50 per hour. Okay? And we haven't calculated how many hours she worked yet because that's when we figure out how much we need to pay her through payroll. So in this case, we could stop here as long as we enter in her information that we know that we have an employee and that we know that she's going to that we're going to pay her $12.50. Okay? Right? not only did we hire Irene, we also end up hiring Albert Allen as a sales representative. Okay? Now this guy here, he only earns money based on commissions, which is going to be 40% of his total sales. Okay? So he's going to be an independent contractor, so a 1099 worker. Okay? His benefits are deducted from his commissions, okay, which we don't give any benefits for this guy. And of course, he's scheduled to work on the 17th of June. Okay? So again, payday is the same day as the payroll period. That means same as Irene, the payroll period is going to start on June 10 and ends on June 23rd. That means he's also going to get paid the same exact time as Irene. Only difference is he's going to be calculated based on 40% of the sales that he earns. So in this case, he's just an independent contractor who's working for me as a sales representative, and he's going to earn 40% of all the profits that he makes through commissions. Okay, so what do we do with this? What do we do with Albert? How do I record him?
When he start,
Okay,
he doesn't start yet.
he hasn't started yet. Good. So in this case, all we do is just hire him. Okay.
Yes.
So there you go. Okay, so same section, except we have an actual tab here for commissions. Okay, so if you go to your subsidiary ledger, you have also your commissions. So here we're gonna fill in that we have Albert Allen. Okay, and how much does he earn? Let's see. He earns 40%. Okay. Awesome. So when we, so he's gonna earn based off of how much money he's earned through sales. So he earns 40% of whatever sales that he's completed. So as commission. Okay. All right. So let's go ahead and see what happened next. Okay. So now it is the 12th of June, right? And we end up going to the Las Vegas Register Journal, okay? And what we did here was we end up buying a quarter-page newspaper ad, okay, to run from the 15th all the way to the 20th of June. And this newspaper ad is basically to advertise that you guys are a brand new coffee shop and you guys are having a sale, whatever it is, right? It's meant to market your store, saying we're a brand new store. So in this case, right, here's the receipt. They required a 50%. I'm sorry. They charged you $85 and you paid with your Visa credit card. Okay, so in this case, I paid with my business credit card for this quarter-page newspaper ad. Okay, so what did I do here? What did I buy?
Purchase newspaper, like advertisement.
We bought advertisement. Now let's take a look. Advertising expense for $60,000. Okay. Advertising expense. Okay. And how did I pay? How did I pay?
Visa credit card.
Visa credit card. So what account? So since what is a Visa credit card to me?
Visa payable.
Yes, it's a liability, right? Because is that my money?
No.
No, it's a national bank's money, and if I use that, I owe National Bank Visa credit card. So in this case, I charged my Visa credit card, and this is what I got. Okay, that I got an $85 charge. So in this case, Visa payable is going to be the account for 22,000. And it's for $85. Okay? And you have everything that you need, right? Who did you pay? You paid the Las Vegas Register Journal. Okay? And they gave you a receipt number. Okay? 548128. That's proof that you had a transaction and you paid with a Visa credit card. What did you buy? I bought a 4th page newspaper ad. Okay. You don't need to specify that you use a Visa payment because you already have a Visa payable right there. Straightforward. Okay. So now that I have my journal done, I now need to plug it into my ledger because now I owe money on my credit card and I need to update that account. So starting with the first one, which is your we bought advertising expense, so we spent money to buy advertising. 1/4 page newspaper ad. Okay. We are finally on our new page, General Journal 4 here, and we just spent $85 for advertisement. Okay. And then, let's see. We now owe money on a credit card. So it's not an accounts payable, right? Because we designated on our credit card, which is the Visa payable. So this is our very first credit card transaction here. Okay? June 12th. What did we do? Now, most cases, what happens when you read your credit card statement? The only thing that you see on there is just the transaction number and the vendor that you charged your card on, right? This doesn't tell you what that transaction is. So on your side of your journal, you could be as descriptive as you'd like to make sure that you can match your transactions to why you purchased them. Now, again, your credit card statement, right? It's going to tell you only the vendor, right? And if you don't remember what that vendor does or who that vendor is, then you're going to have a lot of trouble getting a good track record of your spending. So in this case, what I'm going to do here is, what did you buy? Okay, I could say I bought again a fourth of a page newspaper ad, right? And of course, on the credit card statement, it's going to tell me that I paid LV Register Journal. Okay, that's all it's going to say. But at least if you make a note here, you could compare and contrast your credit card statement, right, through a bank reconciliation and check that, oh, okay, so if I made a payment to Las Vegas Register Journal, then it must be for this 1/4 page newspaper ad. Okay, so that's what I can do here is I'm able to match my expenses to the vendors that I used to pay for on my credit card. So again, we're on General Journal page 4 and we just charged my credit card for $85. So therefore, my first liability or my first charge on my card is going to give me a total of $85. Okay. And because I end up making a payment, I have to now also update my subsidiary ledger. Okay. So who did I pay? I end up paying Las Vegas Register Journal right here. What did I buy from them? I bought a quarter page newspaper ad. What was my invoice number? $548,128. Post reference, once again, General Journal 4. Do we have terms? No, but we paid at time of purchase. So in this case, no terms there. How much was the bill? It was $85. And how did we pay? Did we pay? Yes, we did. We paid using a Visa credit card. So that could be a note that you could add there too, saying that you paid with a Visa credit card. Okay. So that means if you plug in your formula, you should have a balance of 0. Okay. It is very important that you do have this because, again, what if you don't see your newspaper ad in the Las Vegas Register? Then you can go ahead and call them up and say, hey, here's my contract, or here's my contract, so why isn't my ad going through on the newspaper, right? So that's another important thing, is that it's proof that you did pay and that you did request this. So make sure, that's why it's important to keep your receipts and write it in here saying you for this bill, you owed them $85 and you paid them using your Visa credit card. Okay, proof that a transaction exists. And if not, you could call them and say, hey, I don't see my newspaper in the ad. I want a refund. And there you go. Okay. So now here's a second one. Okay. Now, what do I do with that Visa card that I just charged? Is that something that I need to update my my National Bank Visa credit card for? Do I need to update my subsidiary ledger for that transaction?
What about the subsidiary ledger?
I'm asking. So we just paid off Las Vegas Register Journal, right? Now my question is, I use my business credit card, my National Bank Visa Gold Card. Do I need to also update my subsidiary ledger for that?
Yes,
Why?
because we use the credit card.
Okay, so let me ask this question to you. Did we receive a bill?
Oh, no.
No. Okay. The purpose of using the subsidiary ledger is to keep track of your transactions, right? That's only if you have proof of a transaction. So for instance, right? Invoices, sales receipts, right? Bills. Did you receive anything from National Bank Visa?
No.
No. But in this case, right? We racked up credit with National Bank Visa credit card. So that means we should be expecting to be receiving a statement soon. Okay? Well, not soon. Well, yeah, kind of soon because your the month is almost half over. So you're at least you're expecting a National Bank Visa credit card bill to arrive. Okay. All right. But in this case, no, we don't need to put anything in here because we never received a bill from National Bank Visa Gold credit card at all. So in this case, no, we do not need to update that subsidiary ledger. Okay. So let's see what happened next. Okay. We went to go to see City Printers to order a total of 2,000 flyers. Okay. Now, City Printers, right, as you can see here on the invoice, we purchased it on the 13th, and they told us you could pick it up on the within 24 hours because it's a 24-hour turnover rate to pick up the 2,000 flyers. Now, however, they requested us that, hey, if you want us to print these flyers for you, I expect a down payment of 50%. Okay, so in this case, each flyer, right, since I purchased 2,000 of them, they cost me 5 cents each, so the total bill ended up being $100. But they required me to make a 50% down payment, so I did by paying $50, and that means upon pickup, I pay the remaining $50. So, how do I record this transaction?
Accounts payable.
Not accounts payable.
Payable.
What?
Visa payable.
Yes, we paid with a Visa credit card, right?
Mm-hmm.
And then it would be city printers.
Do I have an account for City Printers?
Probably.
No. Okay. So here's a lot of mistakes that students do is they think that the vendor is an account. It's only an account that is considered your relationship with that person. Now, what did you buy? Is that's where the accounts come from, is what did you buy?
So it would be advertising expense.
Now here's a question to you. Did I actually pick up all 2,000 flyers?
No.
No, I can't pick them up until tomorrow, right? So I don't technically have advertising expense, but what did I pay for?
The down payment.
You paid for a down payment. Now, if you remember from the last couple transactions that we've been doing from week 1 or week 2, what do I consider a down payment? What account would I use for a down payment?
Notes payable.
Not a notes payable. That's when you owe somebody money and you can make payments on it.
Prepaid account.
Prepaid account. Yes, you bought services in advance, right? You paid somebody for services that they haven't even completed yet. You gave them an advance payment. So we call this prepaid account. Okay, good. And it's for $50. Okay. So we have everything that we need, right? So who do we make a payment to? City Printers, right? How do we know? We got an invoice or we got an order number. Number 744136. And how did you pay? Well, you paid with Visa credit card. And what did you buy for? So I'm going to say 50% down payment on 2,000 flyers. Okay? That's what you paid for. You bought a down payment. Okay? You didn't pick up the flyers, you didn't buy them. Okay? All you did was pay for services in advance. And what this down payment is going to do is it's going to be applied to the order number when you pick up your flyers. Okay? So in this case, let's go ahead and plug our numbers into our ledger because now I owe more money on my credit card. Okay? So I'm going to my prepaid first. So here we go. Prepaid accounts. Okay? It is the 12th, and what did we buy? We did a 50% down payment on 2,000 flyers. Okay. General Journal, page 4. And we increased our our prepaid accounts by $50. So therefore, you should now have 6704.17. Okay. Right? And of course, with that, I have to go ahead and update my Visa payable because I end up using my credit card to pay for this. And I'm going to put the same exact description, 50% down payment on 2,000 flyers. And we increased our liabilities by $50. So again, this formula, since we're looking at the opposite direction, we have to understand that credits increase liabilities, right? And debits decrease liabilities. So this one is going to be up 1 minus, or plus, excuse me, plus your credit minus your debit. So in this case, it could be up 1 plus left 2 minus left 3. Okay? And that should be giving you a running balance now. So every time you enter in a debit or a credit, it's going to either add or subtract to this number. So again, credits will increase it, debits will decrease it. Okay? And you could drag this formula all the way down as well, right? It will copy the formula, taking the previous amount, and it's going to either add the credit or subtract the debit. Okay? So right now, I owe so far on my credit card $135. Okay? Okay, let's see. So then that very same day, we end up receiving our inventory. We have perpetual inventory. So perpetual regular coffee, we're going to use moving average to calculate the cost. And then we're going to have perpetual supreme coffee. And what we're going to use is we're going to use first in, first out rule. Okay? So here is the bill that we received for purchasing the coffee. Okay? Now, how do you record perpetual inventory? How do I record perpetual inventory? Sorry about that. How do I record perpetual inventory?
Constantly.
What was that?
Constantly.
Okay, good. But the question is, what account am I going to use to represent perpetual inventory?
Virtual.
Huh?
Virtual.
Perpetual inventory.
Mm-hmm.
What account am I going to use?
Receive inventory. Receivable.
No, a receivable is when customers pay you and they owe you.
Oh, well.
What was the rule when you make purchases of perpetual inventory? How do I record it? So this is back in chapter 7.
Oh, payable.
No. Well, in this case, yes, you owe money because I'm not going to pay this right now. I'm going to say I'm going to take advantage of the terms. So, yes, I will be using an accounts payable. But how do I represent that I made a purchase of perpetual inventory? This is the key difference between perpetual and periodic.
We record it as inventory.
We record it as inventory. So what do I have as inventory for these 2 coffees? Let's check your chart of accounts. What are my inventory items for these 2 coffees?
So it would be 12,020 and 12,040.
Yes, right? Regular coffee and supreme coffee. All right? Because we identify when we make perpetual inventory, since we're constantly updating it, it needs to be recognized as inventory right away. So in this case, we end up receiving our inventory. So we have regular coffee. Okay. And we have supreme coffee. Okay. So regular coffee is account number 12020 and then 12040. And like we mentioned, we are not paying them now. We're going to take advantage of those terms and we're going to pay them later. Okay. Now, how much did I purchase the regular coffee for? How much did I purchase the regular coffee for?
How much they purchase it?
Yes. How much did I pay? How much did I purchase for the regular coffee?
125.
Where that's 125 pounds. How much did it cost me? $1.35 each pound, right? So what's my total cost for me buying my regular coffee?
168 with 75.
Good, 168.75. What about my regular coffee? What about my supreme coffee?
155 each and total 193.75.
193.75. Okay. So that should have given me a grand total bill to be $362.50, which is exactly how much I owe. Okay? So again, you have all the information that you need to finish up the description here because who did I receive a bill from? I received a bill from Atlas Coffee Importers. Right? What was my billing number? In this case, I got billed for invoice number 315. Okay? Did they give me terms? Yes. My terms they gave me was 1%, 15, net 30. So that means I can pay within 30 days or I can pay within 15 and receive a 1% discount. So in this case, there you go. That's all the information I need. You don't need to necessarily say I bought this many pounds of coffee because that's going to be in your inventory worksheet. Because we just bought inventory, right? That information is going to be saved for your inventory worksheet. Right here, this is just getting the general idea. Okay? So now that we actually received our inventory, right, we need to also go ahead and update our purchase orders because now we could say, yes, we did receive our 125 pounds of regular coffee and supreme coffee for a grand total of that $362. Okay? Okay, so I need this to be a date. So this, when did we receive it? We received it on the 12th of June. What is the invoice number? 315. Okay. So let's see, what else are we missing? We're still missing our refrigerator. We haven't received a bill yet. Okay. For our refrigerator. Okay. So let's go ahead and so we recorded our purchase orders, right, that we received the items. Okay, so now we got our journal complete. Let's go ahead and plug our numbers into our ledger. Okay, so we just bought inventory, right? We purchased regular coffee and we purchased supreme coffee. So therefore, I need to locate where my inventory is. So in this case, it's the long journal, is the long empty lines here. So regular coffee. Okay. Today's the 12th. What did I do? I purchased 125 pounds of coffee. Okay. General journal page 4. And how much did I increase my account by? 168 and 75 cents. Okay, which will give you a debit balance of 168.75. Right? I also need to update my supreme coffee. Okay, I purchased 125 pounds. General Journal 4, which increased my account by 193.75. So once again, that will be your beginning balance. Okay. And let's see. And last but not least, I owe Atlas Coffee. So I use an accounts payable because I owe them money now. Okay. I owe them for invoice number 315. Okay. General Journal page 4. And how much did I increase my liability by? By another $362.50. Okay. So therefore, I now racked up another amount here, so it increased me to $14,116.40. Okay, once again, not looking too good. Okay, all right. So now that I did my journal, I did my ledger, since I end up having to owe Atlas Coffee, I need to also record that as well, saying that, hey, I owe Atlas Coffee Importers. So I go straight to my subsidiary ledger. I locate Atlas. There they are. Okay. What did I do? I purchased 125 pounds of 125 pounds regular coffee plus 125 pounds supreme coffee. Okay, I think I put okay. Invoice number 315. Reference number, right? We purchased this on General Journal page 4. We were given terms, right? We were given that if we paid within 15 days, we would receive a discount of 1%. If not, the bill is due in 30 days. So, when is my discount due date? If I receive the bill on the 12th, when do I need to pay to be able to receive the discount?
The 27th.
27th of June, right? If not, the bill is going to be due on the 12th of July, right? 30 days, okay? Which is exactly a month. So again, no prepayments I made. However, I end up receiving the bill for $362.50. And I chose not to pay today, right? I'm going to take advantage of the terms and pay it later. So therefore, if you punch in your formula, right, your invoice minus prepaid, minus returns, minus discounts, minus payments, I owe Atlas Coffee $362.50. And what I can do with this formula is I can drag it all the way down. Okay? So that means every time I enter in an invoice, it will automatically calculate for me how much I owe. Okay? All right. So now that I updated my subsidiary ledger, last thing I need to do is I need to now update my inventory. Okay? Because I just purchased inventory, right? I purchased regular coffee. Now my regular coffee, right, because we're using perpetual inventory, right? I should make at the top it should say that it's I'm using moving average to calculate it, so I don't need to constantly keep calculating the average. Or actually, I do need to keep calculating the average. It's for regular coffee and it's for perpetual. Okay, so again, we made a purchase on the 12th, right? We're gonna skip over the cost of goods section because we didn't sell it yet, right? We purchased 125 pounds at a unit price of $1.35 each. So therefore, what is my total purchase price? It's the $168.75. Okay? So I'm going to now in this case, where's do I have freight for this transaction? I'm going to tell you this now. Not yet, but you will. Okay? So in this case, I'm going to stop here because I don't have freight, so I can't continue on. Okay? Let's see. Supreme coffee. I must do the same thing, except this is going to be different because I'm going to be using FIFO to calculate my coffee now. So again, it's the 12. You need to skip over your cost of goods sold. You purchase 125 pounds at $1.55, and you should get a total of $193.75. Okay. Once again, we will deal with the freight cost later. Okay, so that's my inventory worksheet. Okay. All right, so we did everything that we needed to do. So then let's see what happened next. We end up receiving a second bill, okay, same day. But check this out. We end up receiving a bill from Freightline, okay? And what did Freightline do? It looks like they shipped the coffee to us. And what are their terms?
COD.
What does COD mean?
Cash on delivery.
Cash on delivery, meaning they delivered the coffee to us. They expect us to pay for the delivery of coffee. Okay? And it says right here they got this from Atlas Coffee, and their shipment is to go straight to us at Coffee Cafe. Now in this case, let's take a look. I got charged for shipping 125 pounds of regular coffee and 125 pounds for Supreme coffee. Here, I get a grand total of $62.50. So, in this case, how do I record this shipment cost? How do I record this shipment cost? This is this a part of my inventory, or am I going to use it as a separate means of charging? I'm going to pay for it separately.
It's part of inventory.
It's part of my inventory. So that means, what do I do with that? It means I'm going to shove it into my inventory accounts because it's the part of cost of inventory. I'm not going to pocket this out myself and pay for it as an expense. I'm going to include it in the price of the cost of my inventory. So therefore, it's going to be placed into inventory. Now, how did I pay for it? How did I pay for this delivery? Checking, because in this case my terms is cash on delivery. I have to pay them whatever I have to pay. Do I have cash on me right now? No. So what's the best way to do it? Excuse me. Checking. Right? But also, if you use a check for this, right, that guarantees proof of a transaction, right? Because you could give this vendor cash and they can claim they never paid me. So at least with a check, it's guaranteed. So checking was 10-100. Now, if I have to make a payment for $62.50, how would I split this shipment cost? If I have to put a portion of it to regular coffee and a portion of it to Supreme coffee, how would I split this?
We have to calculate each amount and how much tax is due. Tax is due for each one.
Well, in this case, this is a delivery charge, so there's no tax on here. It's just $62.50. So again, services usually are not they don't charge tax on that. Yeah. So how would I split this though?
Just in half.
In half, right? Because in this case, most likely shipment is based on weight. So in this case, if I have an even amount of regular coffee in pounds and have an even amount of supreme coffee in pounds, it only makes sense that they both weigh the same. So in this case, you split the shipment in half. So what is half of 6250? You can calculate it right here. 6250 divided by 2. 31.25, right? Which should give you the grand total of 62.50. Okay, good. Since we wrote a check out, we need to write our check. So go to your check register. Today's the 12th. We got check 1512 for $62.50. And who did we pay?
What is it? How do you say Atlas? Atlas?
That's the company that gave me the coffee. Who shipped out the coffee? What does the left side of the invoice say?
Freight line?
Freight line. Freight line is who we paid to deliver. Okay. Right? Why? Shipping. There you go. Right? Shipping cost for coffee. So we have our check number 1512. We have the exact person. So who did we write a check out to? Freight line. For what invoice? Invoice number 482. Okay? Do you have to specify what happened here? No. It's straightforward, right? You don't need to specify that that $30 or was it $31.25 went to the regular coffee or 50% delivery charges. No, you don't have to necessarily do that. That's not this. Looking at your journal already, you could see that you split the payment. Okay. So next thing is we use check number 1512 to pay. Oh, actually we could put COD. That this was cash on delivery. So that way we know, oh, it was for delivery, right? And you had to pay using check 1512. Okay. All right. So now that I have my delivery charges, let's go ahead and update my ledger account. Okay. Right? So in this case, right, we're gonna tap into each inventory account here. So let's see, 612, right? We had some shipping cost. Still on page 4. And that increased our inventory by $31.25 because again, we're gonna make the customers pay for it, not us. Okay, we don't pay for this shipping separately. We're just gonna include it in the price of the coffee. Okay, all right, we're gonna include it in the cost of the coffee. So in this case, we're adding to our inventory. So now, again, this is going to be a different formula. This is going to be, because in this case, right, for inventory, right, we are increasing our inventory. right? We're adding the shipping to it, so it's going to increase the value of my inventory. So in this case, right, since it's a debit, it's an asset, we're going to take our previous balance, and things that affect our inventory is going to be our debits will increase it and our credits will decrease it. So you're going to add your debit and subtract your credit. So in this case, up 1 plus left 2 minus left 1. Okay, and that should give you now $200. So again, if I were to drag this formula all the way down, if for any reason, right, that I put a debit or a credit in here, because we will be doing that, because when we sell our coffee, we need to update our inventory. It will automatically calculate for me how much my account balance is going to be in my regular coffee account. So in this case, that's how I keep track of my inventory is I'm constantly purchasing, which is adding. I'm constantly selling, which is subtracting. Okay? So there you go, $200. Okay? Now, this is also going to be very important, and I'll talk about that in a few seconds, but right now, your current balance in your regular coffee account is $200. Okay? You're going to have to do the same thing for your Supreme coffee, because we also have to include the shipping costs for my Supreme coffee. Okay? And we increased it by also the same amount. This is the same formula, right? Debits increase my balance. Okay, so I'm going to do the previous one plus my debits minus my credits. Okay, and I'm also going to drag this formula out too, because this is also going to help me also be able to keep track of my coffee as well, right? So right now I have a total of $225 in my Supreme coffee, right? And of course, I had to write out a check. So therefore, I had to spend money. Once again, I couldn't pay this later. This was a necessary transaction I had to do, which was for making the purchases of for the coffee. Okay, so again, I used check number 1512. Right, I'm on the fourth journal, which I decreased my account by $62.50. So therefore, that means my account balance dropped to $5,689.32. So again, not looking too good, right? I'm dropping really low in my bank account, but that's the part of doing business. Okay. So because I made a payment to Freightline, I have to record that there was proof of a transaction. Just in case Freightline says, no, I never received a payment, or no, I never delivered the coffee to them, XYZ, okay? So here you go, Freightline. Okay? What did they do? They delivered 250 pounds of coffee, right? And I used check number 1512 to pay for it, okay? Invoice, right? Number was what, 482? Invoice was 482. So that's proof that they charged me, right? Post reference is General Journal 4. And what was the terms? They had me pay COD, meaning cash on the delivery, meaning I paid at time of service. Okay? So therefore, how much was the invoice amount? It was for $62.50. And did I make a payment? Yes, I did. I made a payment with check number 1512 for $62.50. So there you go. That's proof that a transaction has occurred, and that they delivered the coffee, and that you paid them. Okay? very important that you have this track record. Even though, yes, I owe nothing, that's not the purpose of this. This is the purpose of this is to keep track of all your bills, just to so then you could say, I did pay this person. Okay? Here's the proof by the check number. Okay? So now that we did the ledger, or now we did this journal, we did the ledger, and we did the subsidiary ledger, last but not least, we need to now update our inventory because we just added a cost to my inventory. And I also now need to figure out, well, what happens when I do sell my product? I need to figure out what the cost of each item is going to be when I sell my coffee. So, starting with regular coffee, right? My freight was $31.25, which gave me a total cost of, I hit the wrong number. Gave me a total cost of $200. Okay, great. Okay, I know that by my ledger account. Okay. Now in this case, because I'm using moving average, that means I only have one batch of inventory. So what is going to be my average cost per item? All right, can you guys calculate it? What is 200 divided by 125?
160.
$1.60. Okay. So how do I move this inventory into my inventory on hand? Now remember, how you're supposed to do this is it's supposed to be you're supposed to copy over your quantity of 125 and you're going to copy over your total cost of 200. And what you're constantly doing here is you're going to be constantly calculating the average cost per item, which is that means the calculations is going to be in this column right here. Okay? And I'm going to actually expand this because we're going to get a lot of different numbers. We're going to get large, or in this case, unrounded numbers. So in this case, we want to make sure we get a good track record of how our purchases affect my average cost and how my cost of goods sold also affects my average cost. So right now I moved it into inventory. I have a total of 125 units on hand and have a total cost of $200. Now, this is what I was going to mention earlier. It is very important that you do match your inventory worksheet to your ledger. Okay, let me repeat that. You're going to match your inventory worksheet to your ledger. Your ledger is always going to be correct because what are we doing in the ledger? We're constantly typing rounded numbers. Okay? That's going to prevail way over your inventory worksheet because your inventory worksheet is what you're calculating as a unrounded number. Okay? Because you want to make sure that you get every penny worth. Okay? But here's the case is you are always going to use your general ledger as your total means to make sure that your inventory worksheets are lined up and correct. Okay? So again, the inventory worksheet isn't your go-to. Your ledger is your go-to to make sure you calculated everything on your inventory worksheet correctly. Okay? So for a fact, I know I should have $200 in my inventory for my regular coffee. Okay? And then for Supreme Coffee, let's go ahead and plug our numbers in as well. We had another $31.25, which gave us a total of $225. Now in this case, I'm using FIFO, meaning first in, first out. That means I have to keep these batches of inventory separate because that is what first in, first out means. I'm going to sell each coffee by batch, and I'm going to use the rules of FIFO, meaning the first batch that I purchase is going to be the first batch I am going to sell first. Okay. So in this case, right, we have $225. What is my cost per item for this batch of inventory? If it's $225 and I have 125 pounds, what is my cost per item?
180.
180. So once again, I need to carry this value over into my inventory worksheet. And this is what I want you to do. Okay? I find this the best for me because I don't like to have to keep calculating this over and over. But what I'm going to do is I'm going to copy over my quantity. And I'm going to copy over my cost per item. And my formula is going to be my quantity times my cost per item to get me my grand total cost. Now, what I'm doing here is that means every time I sell my inventory, I'm going to just update my quantity, and that's going to reflect how much I have in grand total. So that's how I'm using this, all right? Now, for instances, when you do come across that split penny where it's 0.5, 0.5, 0.5, that's where you have to also go through your books to make sure that you don't add that extra penny on one of the sides, okay? So that's just a little thing that we need to look out for. So that means I'm going to be constantly making purchases of inventory. So what I'm going to do here is I'm actually going to start creating a little total here, because in this case, right, I will have a bunch of batches of inventory, but I will never see a grand total. Okay? I want to know how many goods I have available. So I'm going to go ahead and add up this column right here. So that means I have a whole total of 125 pounds available at a total cost of $225 dollars. Now, once again, what this does is, so that means if, let's say, I end up making a second purchase for another 225, right? Now it's telling me I have available is 250 pounds. So that's what I'm doing here. It's just making a column to equal up all my batches of inventory, because that's what I have to do because I'm using FIFO. For moving average, I don't need to do anything here because I'm going to constantly know how much I have available. Because every time I make a purchase of inventory, I have to add it to my quantity and I have to add it to my total cost. So I'm going to constantly know how many pounds of regular coffee I have available at all times. This one I don't need to calculate because I'll know by every time I make a purchase, because what I'm doing here is I have to constantly keep adding the quantity and the total cost to actually calculate my new moving cost, average cost per item. Okay. So there you go. We know for a fact that $225 does match my ledger. Okay, but again, this is what I was doing. Every time we sell something or every time we purchase something, we're going to constantly be referring to our ledger to make sure that we did the calculations correct. Okay. All right. So that was the whole section on inventory. So what I'm going to do here is we're going to stop here. That means when we continue on after the break, we're going to be starting a brand new day. Okay? All right. So right now,